Northern China's markets are booming. Factories hum with activity, churning out goods for eager consumers worldwide. Demand is high, orders are plentiful, and business is good. Yet a shadow looms over this economic revival, a shortage of shipping containers. The very vessels that carry these goods across oceans are in short supply, leaving businesses in a bind. The irony is stark. A bustling economy faces a bottleneck, its growth hampered by the lack of steel boxes. This is the container chaos of Northern China, a microcosm of a global logistical nightmare. The situation is particularly acute in Northern China, a manufacturing powerhouse and a major hub for international trade. The region's ports are clogged with goods awaiting transport, while businesses scramble to secure containers and vessel space. The scramble for containers has become a daily struggle, with prices skyrocketing and availability dwindling. Quotes for shipping containers have reached unprecedented highs, adding another layer of cost to already strained businesses. Amidst the economic vigor, a logistical logjam threatens to disrupt the flow of goods and stifle growth. The Red Sea crisis, a complex geopolitical situation impacting maritime traffic, has cast a long shadow over global shipping. The crisis has led to reduced vessel capacity, as shipping lines navigate the uncertainties and potential dangers of the region. This reduced capacity has created a ripple effect, impacting trade routes and container availability far beyond the Red Sea itself. Northern China, heavily reliant on shipping routes that traverse this troubled waterway, feels the impact acutely. The ripple effect of the Red Sea crisis underscores the vulnerability of global trade to geopolitical events. The impact of the Red Sea crisis is not just about numbers, it's about the flow of goods, the movement of essential supplies, and the interconnectedness of global commerce. Reduced vessel capacity means fewer goods can be transported, leading to delays and shortages. Businesses in Northern China are left grappling with the consequences, facing increased competition for limited container space and escalating shipping costs. The crisis highlights the fragility of global supply chains, where a disruption in one region can cascade through the entire system. Hans-Henrik Nielsen. The Red Sea situation has added a layer of complexity to an already strained shipping market, he notes. Reduced vessel capacity is impacting trade routes globally, and Northern China is feeling the pinch. His insights underscore the interconnectedness of global trade, where events in one region can have far-reaching consequences. The Red Sea crisis serves as a stark reminder of the vulnerability of global trade to geopolitical events, with real-world consequences for businesses and consumers alike. Shanghai, one of the world's busiest ports and a critical gateway for Chinese exports, is grappling with the container crisis firsthand. The port is teeming with activity, but the flow of goods is hampered by the lack of containers. Ships queue for days, waiting to unload and reload, while businesses anxiously seek containers to transport their goods. The scramble for containers has transformed Shanghai into a microcosm of the global shipping crunch, a place where the logistical nightmare is palpable. The port's struggles highlight the strain on global supply chains, as the demand for goods outstrips the capacity to move them. The container shortage in Shanghai has led to a surge in prices, as businesses compete for limited space. Quotes for containers have reached unprecedented levels, adding another layer of cost to already squeezed margins. The situation is particularly challenging for smaller businesses, which lack the leverage of larger corporations to secure containers and negotiate favorable rates. The shortage has created a sense of urgency and uncertainty, as businesses scramble to adapt to the new reality of scarce containers and unpredictable shipping schedules. The scramble for containers in Shanghai reflects a broader trend of rising costs and logistical challenges, impacting businesses of all sizes. The congestion in Shanghai is not just a local problem, it's a symptom of a global shipping imbalance. The demand for goods from China remains high, but the capacity to ship those goods has been constrained by the Red Sea crisis and other factors. This mismatch between supply and demand has created bottlenecks in ports worldwide, with Shanghai bearing the brunt of the pressure. The situation highlights the interconnectedness of global trade, where disruptions in one part of the system can ripple through the entire network. The congestion in Shanghai is a reminder that the global shipping industry is a complex ecosystem, vulnerable to disruptions and prone to imbalances. The impact of the container shortage in Shanghai extends beyond the port itself. Businesses across northern China rely on Shanghai as a gateway to global markets, and the delays and disruptions at the port have cascading effects. Factories face production slowdowns as they wait for containers to ship their goods. Retailers experience delays in receiving merchandise, leading to empty shelves and frustrated customers. The container shortage in Shanghai has become a bottleneck in the supply chain, impacting businesses and consumers across the region. The situation underscores the critical role of efficient ports in facilitating global trade and the far-reaching consequences of disruptions to this vital infrastructure. The container shortage in northern China is a microcosm of a global conundrum, a widening gap between the demand for goods and the capacity to ship them. Global trade has rebounded, fueled by economic recovery and pent-up consumer demand. Yet the shipping industry, still reeling from the disruptions of the Red Sea crisis and other challenges, has struggled to keep pace. This mismatch has created a container crunch, with businesses worldwide scrambling for space on ships and facing skyrocketing costs. The container conundrum highlights the fragility of global supply chains in the face of surging demand and limited capacity. We are seeing an unprecedented surge in demand for container shipping, says John Smith, CEO of a leading logistics company. The global economy is rebounding, and consumers are eager to spend. However, the shipping industry is still playing catch-up, leading to a shortage of containers and increased costs. His words capture the essence of the container conundrum, a collision between resurgent demand and constrained supply. The global container shortage is a stark reminder that the shipping industry, often taken for granted, plays a crucial role in the functioning of the global economy. The container shortage is not just about numbers. It's a reflection of the intricate web of global trade, where goods traverse continents, connecting producers and consumers across borders. The steel boxes that carry these goods are the lifeblood of this system, and their scarcity creates a ripple effect throughout the global economy. Businesses face production delays, retailers grapple with empty shelves, and consumers encounter price hikes and product shortages. The container conundrum highlights the interconnectedness of global trade, where a shortage in one region can disrupt the flow of goods worldwide. The container shortage is a complex problem with no easy solutions. Addressing the issue requires a multi-pronged approach, involving investments in shipping capacity, improvements in port efficiency, and greater collaboration between governments and industry stakeholders. The container conundrum is a reminder that the smooth functioning of global trade is essential for economic prosperity, and addressing the challenges in the shipping industry is crucial for ensuring a stable and resilient global economy. The container chaos in northern China is more than just a logistical headache or an economic statistic. It's a story about people. Behind the headlines about port congestion and container shortages lie the lives of individuals whose livelihoods are intricately linked to the smooth functioning of global trade. Factory workers in northern China, diligently assembling goods destined for distant markets, face uncertainty as production slows due to the lack of containers. Their hours may be cut, their wages reduced, their jobs jeopardized as the ripple effects of the container shortage cascade through the supply chain. Small business owners, the backbone of many local economies, find themselves squeezed between rising costs and dwindling supplies. Shopkeepers, unable to replenish their stock due to shipping delays, see their shelves empty and their businesses falter. The container chaos translates into lost income, mounting anxieties, and difficult choices for these entrepreneurs. The human cost of the container shortage is a stark reminder that economic disruptions are not abstract concepts. They have tangible consequences for real people, impacting their livelihoods, their dreams, and their families. The container crisis is not just a story of economic hardship. It's also a story of resilience. Businesses are adapting, finding creative solutions to navigate the challenges. Some are exploring alternative shipping routes, seeking out smaller vessels or even resorting to air freight to circumvent the container bottleneck. Others are diversifying their suppliers, reducing their reliance on long-distance shipping, and exploring local sourcing options. The human response to the container crisis is a testament to the adaptability and ingenuity of individuals facing adversity. The container crisis reminds us that global trade is not just about numbers and statistics, it's about human connection. The goods that flow through shipping containers represent the fruits of human labor, creativity, and ingenuity. They connect people across continents, fostering cultural exchange and economic interdependence. The container chaos, while disruptive, also underscores the importance of global trade in sustaining livelihoods, fostering innovation, and connecting humanity. The container chaos in northern China, exacerbated by the Red Sea crisis, marks a turning point in global trade. This isn't just a temporary blip, it's a symptom of a deeper shift, a new reality dubbed COVID-19 shipper capitulation. This term encapsulates the realization that the pandemic's disruptions weren't just a passing phase. They fundamentally altered the dynamics of global shipping, leading to increased costs, unpredictable schedules, and a heightened sense of vulnerability. This new reality requires a recalibration of expectations, a recognition that the old certainties of pre-pandemic shipping are gone. The concept of COVID-19 shipper capitulation reflects a growing acceptance of the new normal in global shipping. Businesses are adjusting their strategies, factoring in longer lead times, higher costs, and the possibility of disruptions. They are diversifying their supply chains, exploring alternative sourcing options, and building in greater flexibility to adapt to unforeseen circumstances. This shift in mindset marks a departure from the just-in-time inventory models that dominated pre-pandemic supply chains, towards a more resilient and adaptable approach. COVID-19. Shipper capitulation is not about giving up. It's about acknowledging the new reality and finding ways to thrive within it. The container chaos and the concept of COVID-19 shipper capitulation prompt a deeper philosophical reflection on the nature of global trade. The shipping industry, often hidden from view, plays a crucial role in connecting humanity, facilitating the flow of goods, ideas, and cultures. The disruptions of recent years have exposed the fragility of this system, reminding us of the intricate web of interdependence that underpins global trade. This realization calls for greater collaboration, innovation, and a renewed appreciation for the human aspect of shipping, recognizing the individuals who work tirelessly to keep the world's goods moving. The container chaos in northern China is a microcosm of a global shift, a wake-up call to the new realities of global trade. It's a reminder that the smooth functioning of the global economy relies on a complex and often overlooked system, vulnerable to disruptions and in need of constant adaptation. It's a story about the interconnectedness of humanity, the resilience of individuals in the face of adversity, and the enduring importance of global trade in shaping our world.